Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning, Nick.
Right, one thought-provoking slide. Great British pound against the US dollar, a daily chart. This looks an absolute pickle to me. What are your thoughts?
Well, we've seen a big jump. Obviously, the vote last week at the MPC meeting, Andy Haldane, one of the biggest doves on the MPC, voting for a hike, which was very surprising. What that's done is ramp up expectations for this August meeting, where people are now expecting the BOE to hike. My problem is I just can't see them hiking with the economy the way it is at the moment, and I can't see the economy changing that much for the better in the next 2 months. We've just come over a situation where the market was looking for a May hike and got all set up for a May hike. And got the air let out its tires there. And I think I'm definitely looking at a trade here where we're going to have the same situation with the market heavily expectant on a rate hike in August, and maybe one's not going to come.
Well, I think another commentator said that it was 100% probability of a May basically rate hike, and it didn't happen. I tend to agree with you. I'm looking at lots of slowdowns in lots of different parts of the business, and I'd be very, very surprised. Now, cable as a currency pair is meant to be one of the most difficult to trade. There was a very good article this year in the FT, basically by fund managers, saying it's impossible to predict the way of cable, which makes our lives very, very tricky. Is it any easier being a day trader on this currency?
Well, obviously you can trade intraday and scalp it and pick your levels against support and resistance. We had a big level 132, 132.20 on the way up. I highlighted that last week and said look at it to be support, and today we find the lows 132.20. So there are levels to trade, but it's very difficult to take a long-term view in this. You can't just hit and hope and buy it on the new found expectations for an August hike, because you can have a Brexit headline just around the corner and then you're down 100 pips. So you've got to roll the punches. I mean, if we didn't have Brexit here and now, I'll be scaling in shorts all the way into August. But I can't do that because of the risk of everything else going on. But this is a trade I'm looking at. If we've still got these expectations high and the pound's still high into August,
you're a seller for choice by the sounds of it.
Yeah, and unless we're sitting on 3% growth year on year, or sort of 0.8% growth quarter on quarter, and inflation's up near 3%, I'm a seller. I'm potentially a big seller into this one. But the other side of the coin is we've got to factor in that the Bank of England, they want some rate margin. The Fed's building in their rate margin. Bank of England's sitting on 0.5%. They've not got any margin in that, and they've even said that in the message last week. That they're going to keep reinvesting QE until rates are at least 1.5%, and that's down from the 2% previously that they were going to withdraw all that stimulus. So they see a lower rate of a lower path of rates, and they need that margin, because if we do suffer a downturn, then their only thing, they've got 0.5% to play with, and then it's straight into QE again, and they don't want to do that. They've also brought in the term lending scheme that they had running. They're bringing that onto the balance sheet, which gives them, some 127 billion to offer to business financing again. Another form of QE ready to go, and I just can't see the economy performing in the next 2 months, and I think the market's going to get its bum smacked again.
On that note, young Ryan, thank you very much indeed.
Cheers.